Hello and welcome to the Stock Planner channel. We're a swing trading channel. Today we're going to analyze three stocks: Netflix, Salesforce, and Apple. I think the technology sector is going down, and I'm going to tell you why. So let's get started, but first I'll tell you that the Stock Planner channel is an education channel. You must do your own due diligence. Trading is risky, but once you learn it and do it, you'll win for life. Let's not waste any time. Let's get started right away. Technology sector, Netflix, Apple, and Salesforce. Lots of swing traders go to FinViz to analyze their stocks and make some decisions. It's free, and that's another reason why a lot of people like to go. We're looking at the group screen and looking at the sectors, and we see that, Friday was basically a green day. You can check that with the maps, and we're looking at one-day performance. A lot of green on that screen. It's easy to detect that we're talking about a good day on Friday. Looking at the tech stocks, Google, Amazon, Microsoft, Netflix. Looks like the techs have a good day, and they did, but not as good as basic materials, financial sector. Going out to the 1 week, though, we can see technology did not do very well in the monthly. I think it's going to be true, or fairly true, on the monthly. Yes, red. And generally, I don't know what the election is going to do on Tuesday, but generally I'm bearish on the market for a little while until we fix our problems. And we're looking at the NASDAQ for the day, and we can see that it went down and then climbed back up, but overall finished at least a percentage point better than its open. I like looking at FinViz charts because they put these nice little channel lines in, and this is a daily chart, and we can easily see that the channel has been moving down, and it's in its downward lower location of the channel, bottom of the channel. Is it still going to go down, or is that going to be support? Generally, I feel that the market still has about 20% decrease over the next 3 to 6 months. Looking at simply Wall Street, which is a tool that I use to analyze fundamentals of the stock. And you can see I have different lists out there. One that's a beginner's portfolio, 5G, transportation stocks. But we're looking at tech. And then these are stocks, and I'll repeat this again. These are stocks that I think will do well for the decade. NVIDIA, Taiwan, and it's sorted on a 7-day return. So these are stocks that have done well on the last 7 days. But we're pessimistic or short leaning or bear leaning to the market. So we wouldn't take the top stock because those are going to have headwinds like every stock in the technology, but less headwinds because there's influences to drive this stock higher. Let's go down to the bottom of the list, and we see Apple, Netflix, and Salesforce. And this is very popular too, Snowflake. But I'm going to use these three to look to see which ones I might still want to short and do some analytics to it, metrics, compare. Apple, Netflix, Salesforce. I went to the bottom of the list because I'm looking for the bad stocks, not the good stocks at the top. Okay, so once I have these three stocks that I want to short, or the bad stocks, or the ones that are not performing well over the last 7 days, whatever my criteria was for selecting them, I typed them into a little spreadsheet, Google spreadsheet, and scraped for some data on FinViz. And I found out via FinViz that it's optionable, shortable for all three of these. Of course, a lot of these are on my watch list, and I've already known this. And the share prices, they're all above $100. The largest market cap is, of course, Apple. And all of the businesses were profitable. And the target prices, and these are 1-year target prices based on some analysts. And I can tell you, these guys get paid a lot to do this. They're supposed to know what they're doing. And I can figure out my return on investment if this comes true. And they're all positive numbers. So if I was going long, which one would you take? Of course, you would take, if you trusted the analyst, you would take this number here, CRM. And this stock, by the way, Salesforce, it's got a lot of hype for the future. It's a lot of people talking about it, but it hasn't done anything right at the moment. You'll see this in a minute when I analyze it. So jumping back into FinViz and choosing my Apple stock, we can see that, hey, these has good support lines, and resistance lines. This stock has a good pattern for swing trading. Look at that. My, you can catch those swings. And you can see where I got my data from. Optional, yes. Analyst recommendation there. Target is over here somewhere. Yeah, they're right there. Target is 181. 181 is way up here. So, hey, look, got a ways to go. That analyst really loves Apple. But look what's happened. Looks what happened since April. That's about 40%. I think I read it 40% of its value. Of course, we know what Apple does. Cell phones, iPods, lots of computer equipment, technology company. And we're looking at the snowflake. What this tells you a little bit of an overview of what you need to know. The future does look bright. Not as bright as some other companies. It's undervalued, and it's a healthy company. It's trading. That's not anything underneath its fair value. So it is overvalued. Earnings forecast to grow. That's not good either. Earnings have grown 15% over the last 5 years, and now look, earnings are going to slow down. That bodes well for a short, a continued short. And you're going to find that out with a lot of the tech companies right now. One of the ways a lot of people see if a stock is undervalued is they compare the PE with its peers. There's Google, Facebook, Meta, Microsoft, Apple's right here. I would say that it performs with it rather good with its peers. And if you use the future cash flow method to predict what this price should be, the current price is 138, and they're saying it should be 138. So there's not a lot of growth here in the numbers for Apple. This is why we're seeing a slowdown in people trading it. And a lot of people say the FANG stocks have really lost its luster. But now the question is, do we really want to go short on Apple? Looking at a trading view chart of Apple, and this is free, a free package. You can do a lot with this charting package, by the way, and do some paper trading too. My settings are in the description below. This indicator is the RSI, and this one's the RSI, and this one is the MACD. And when the MACD is above the zero line and does a crossover, right there, you see a little red dot there. It's very faint. And by the way, this is on the daily chart. And you see the MACD coming down below. I've got my MACD wrong. This is the RSI. When you see it above the 70 and come back around, that's this overbought condition. That's the time you look for shorts. And then when these two indicators, and then there's a third one I use a lot of times, stochastic, occur at the same time, it gives it a downward signal. And likewise, it's the opposite here for the RSI. That's it. I got it right this time. And the MACD is below the zero. Those are two conditions that I use. And I have a third condition. Now you call it the three indicator strategy. And I have signals, by the way, out in my Discord for when these occur at the same time. It's premium service, but it's very cheap. When they occur at the same time, that gives a pretty strong signal on the daily time frame. And if you want to take away this noise, and looking at, again, the MACD above the zero line, come back around, it's time to take a short. That would have been a great time. And these are weeks, so that would have been about nearly 2 months. Likewise, the RSI come back around. The MACD is below the zero line. RSI, MACD. That's the time to go long. Now, this long didn't last long, about 3 weeks. As we've seen, the stock market had a little bit of happiness. Now, after earnings report, things are looking a little bleak for Apple. Here is the RSI come back around. That's normally a sign to take a short. When it goes above the 70 and comes back around, that's the time to take a short. But in this case, the MACD is not above the zero line. So we would have a wait and see attitude. Another free tool that you might want to look into is Option AI. And I'm looking for the expected move for Apple 3 months out. A lot of times I'll trade options, but I just want to know if I enter this trade within 3 months, what's my reasonable expectation that the stock price will move? And it says it's going to move 11% in the next 3 months. And if I invested $1,000 at 11%, that's easy to figure. I'll get $110. $1,000 invested gives me $110. Now, expected move can go either way, up or down. You don't know. That's called trading. I think it's going to go down in the next 3 months by 11%. And since we're going to do these other two stocks, Netflix and Salesforce, I calculated those as well. And the expected move for Netflix is 16 or 17%, and Salesforce is 14. Looking at Apple on the daily time frame this time, each of these bars is a day's worth of data. We see that Apple had a move up over a course of about 10 days, and now it's swinging down. This could be support, and bounce off of support. That happens a lot. Go back up. The RSI would indicate that might happen on the daily time frame. On the weekly, it was not so. On this kind of reversal, we like to see the MACD below the zero line, and it's not. Current price is 138.38, as we see. And if I was going to buy it, I would expect the move to be 154. And if I'm shorting it, 122, somewhere right in here. Now, is the stock going to go up or down? That's trading. That's what you must decide. If it does go down, as we think it's going to go, we invested $1,000, you'd have $114. That's 11% return. Of course it is. But if you did 4 of those over the course of a year, you could achieve 45%. That's fantastic. So the question becomes, if it does get down to where I'm at, would I be interested in buying Apple at that price, $122.60? And I think I would. So I could sell a put at this level, 122, take the premium, and wait for it to come down. Or I could short the stock by selling it and getting this, or do an option trade, a bear call spread, and hope it stays down below this point at expiration, which is in 3 months. Actually, selling a put looks very attractive. So what actually I'm going to do is wait to buy at 122, or sell a put, and when the price gets down there, I own the stock. Wait to buy or sell a put and make some money on the way down. But the stock market is so volatile right now. I think I'll just wait and see what happens, and wait till Apple gets to 122. Buyer at 122. That's the action for me. And it's CRM ticker, Salesforce. And you can see it's optionable, shortable, and a market cap that's less than Apple. It's a profitable company. Target price is 220. Current price is 139. That's a jump there. And that's a 57% jump. So the analysts expect this stock to go way up. Looking at Simply Wall Street, Salesforce provides management software for customer relations and customer service. And it's proprietary, so once you buy it, you got to stick with it. It says it's undervalued and has some optimistic future, and it's a healthy company. According to Simply Wall Street, it's 45%, 46% below the estimate of fair value based on free cash flow. Earnings expected to grow. There's that whopping 46%. CEOs is selling the stock. That's not a good sign either. Looking at CRM, Salesforce, on the weekly, we see that we have a nice run out from April to the first of the year, this year, and then a nice run down from the first of the year on large drop last week. Again, I think that we're going to have 25% more downside, and this stock is going to end up somewhere down in here. Let's do some analysis and see what the expected value or expected move is. Expected move for this stock is about 14%, and the current price is like 139. So if we were going to buy this stock, which we're not, the top end would be 159 or 160, somewhere right here. And the low end would be 120. And if you invested $1,000, you'd end up at the end of 3 months, 142, which is a 14% return, 56%. That's terrific. Let's drop this down to the daily. And we see a steady decline, a little bounce up here, but now it's moving down again. The MACD is saying go down. The RSI says, hey, we're overbought in this area right here. Well, that's, yeah, and it's going about the reverse, and it did. Now it's in the oversold. Maybe it's coming around, but I don't know. It's definitely a level of support right here, and it could bounce and go that way. But you have to decide if it's going to bounce or continue down. Technology stocks have been beaten down for a long time, since the first of the year, and I think that'll continue. So I would say it's going to go down before it goes up. Back again to that low end. If it's short, it's about 120, and here we are. Do you think it's going to get there? I do. Would you be a buyer at 120? Possibly. Analysts say up. Your indicators say down for the short term. So based on our analysis, we could buy at 120 or sell a put at 120 and get this at a discount. It's a good stock to have in the future. Or you could short this at 159, 160, since the indicators are saying short for a few days. I think techs will stay beaten up. What do you think? Leave a comment below and engage. Your trading will get better. And we're going to go to the last stock. Well, the last stock that I want to talk about is Netflix. And you can see that the return, or RI, is the least. If you were going to just do some analysis based on the target price of the analyst, you would say, hey, look, these two stocks here, I'm going to buy. The analysts say so, they must know their stuff. But that sector is steadily going down. And I have a feeling that's going to get beaten down a little bit more. Now, this one, the analysts, these pros, are saying it's only going to go up 7% over the year. These are all yearly. And that's based on a target price and the current price. So they're much more optimistic about the Apple and Salesforce. And you're going to see a lot of news on those two stocks. Netflix, it's got a lot of negative news lately. And you can see it's optionable and shortable. It is profitable, but look at this. These numbers are almost the same. And that's the probability the past 5 years, which is the PE for the last 5 years, and the forward PE. And I think that's for a quarter. Sales growth is 27% according to FinViz. We're going to look at some of these numbers here in a minute on Simply Wall Street. Anyway, the Wall Street analysts are less optimistic on Netflix. They weren't growing. They just recently grew their viewership, membership, but for about 6 to 8 months, they were not growing. And by the way, if anybody wants information on this spreadsheet, I was thinking about sharing it, but if anybody's interested in it, leave a comment below and I'll consider putting it out on my free Discord. Streaming services, entertainment, Netflix. I really don't need to tell you about it. According to Simply Wall Street, it's trading at 25% below the estimate of fair value based on free cash flow. Free cash flow is the amount of money that you can invest back in your business. It's normally a good thing. Earnings are forecast to grow 17%. That's not bad. Future looks bright for Netflix. Health of the company is not bad, and it has some path growth. Some issues. This video is getting a little long, so I don't want to go into too much of those issues. And this article says that Netflix is definitely worth watching. I think so too, but I do think we have some downside. Here's Netflix, there's Warner, and here's Disney. And it seems to be the cheapest ones of the three. And you got 10-cent music here. Here's a current price of $260, and it should be trading at around $348 according to Simply Wall Street. I believe it'll get there, but maybe not in the next 2 years. Here's the future growth lines, revenue and earnings. This is revenue. It's got a trajectory up. We like that. And this is earnings. It's fairly flat. Here's the industry and the company. The company is not growing as fast as the industry. You'll see that for a while, I believe. Assets and liabilities for the financial health, and that seems to be okay. Looking at Netflix on the weekly time frame, each bar, this is a week's worth of data. We can see that we had a downtrend starting around November 29th or December 1st. Then a slight upturn in July of this year. And I'm thinking it might be a downtrend starting right about now. The weekly RSI went from its overbought and it's heading down. Normally a short signal. Dropping down to the daily. You can see the daily time frame. Each bar is a day's worth of data. We had a top here and possibly a support there. If that's the support line, we have a little ways to go. Maybe the RSI was in its overbought condition, came back around past the 70. And this is your MACD. It's pretty level, but it is above the zero line, which is a condition I always look for that was short. Now you adjusted it a little bit, you can see it better. So if you were going long, you would go to 304, and you would expect it to get up to that point. It's possible. I don't think in these conditions, though. We are in the midst of an inflation cycle where people are going to look like they're going to cut back on services. In a recession, that doesn't bode well for a paid service like Netflix. And a lot of people think it's already too expensive and chose too many commercials. And if it went down short, which is what I think is going to go, $216, $217, somewhere around there. So what do you think? Is it going up or down? I think it's going down, and I think I'm willing to take a short where it's at. Taking a short where it's at in the next few days. The trade would look something like this, going out to 3 months, January 20th. And if I do that and invested $1,000 for the next 3 months, I'd end up with $169 profit. That's sweet. That's 17% on $1,000 investment. If you did that 4 or 5 times, or 4 times, you'd have 67%. That's really good. So this is a trade that I like. I'm waiting for the other two, which is Apple and Salesforce. Waiting for it to come down, and I'll take this trade as a short Monday or Tuesday of this week. Let me know in the comments below what you think. Remember to do your own due diligence. Like and subscribe to this video, and we'll catch you on the flip. Netflix short soon.